Today we are here to analyze and discuss how all the volatile Israeli tension headlines may or may not impact markets, and our goal is not to war profiteer or take advantage of the situation. First of all, terrorism is a terrible thing, and the terrorists should absolutely expect a massive response. I don't think the situation is going to end today. I don't think, based on what Netanyahu said, we're going to get that kind of truce. This is going to continue for some days, and I think it deserves to continue for some days. When you have terrorists, you have to, fight fire with fire, give them the terrorism back, because they're just going to use it again to provoke additional situations. They need to suffer the consequences of their instigation. However, that's beyond the scope of the video. Getting into the moralities is beyond the scope of this video. This video is about analyzing the markets. So, first of all, we have the bond market closed today. Yes, bond market futures are open, but I think it's important to note that the bond market is closed today. And so far, we've really just, in my opinion, been trading off of headlines, not necessarily economic impacts or any of that. I think we've been trading off of headlines. What exactly does that mean? That means people see war. When they see war, they see fear. When they see fear, they buy bonds. I think that's essentially what has occurred for broad markets, indices, etc. Yields have come down in terms of futures, and stocks have gone up because of that. However, I would like to note that the NASDAQ is trailing all the major indices. So I find that peculiar. Obviously, both Tesla and Nvidia have their own individual things that might be dragging them down a little bit. But I think that paints a larger picture about what we think is going on. I don't think the market is fully adjusted to the new reality of higher interest rates and quantitative tightening. If it actually might not be a new reality, I don't view it as a new reality. I'm not trying to say that there's some new world order or anything like that. What this is a return to normal. This is what the normal environment is. It didn't make sense to lend for 10, 20, 30 years at 1 or 2% like was occurring in COVID. And nobody was doing that. That wasn't the case. Those rates were only in existence because of the Federal Reserve. So now we've got money being shredded. We've got interest rates higher, but historically nothing too crazy. And we've got stocks still at very high multiples. All the mega cap techs, I'm not saying that they make bad products. I'm not saying that they're bad companies. I'm not saying they're going to zero. I'm just saying that they're all trading well above 20 forward price to earnings ratios. And, just looking at history, those are relatively rich valuations. And these companies represent significant portions of the S&P 500, and they're not very much in line with the rest of the S&P 500. Not saying that they should be. They deserve some premium for their perceived economic moats. But there's a lot of stocks out there. There's a lot of businesses. There's a lot of companies. And I'm not saying they're small companies. They're definitely big companies. They deserve high valuations. I'm just saying that they're not trailing multiples. Their forward multiples are quite high, are quite expensive. So we're seeing the NASDAQ down a little more. We're seeing Nvidia and Tesla down a little more. It's one day. I don't look at things on one day. What I'm saying is we're seeing a short-term move here, seeing a reaction based on the headlines. And that is all I think is occurring today. So I don't think we should be trying to, look too much into what the immediate reaction is of the Israeli tensions. I think we should be focused on broader, more macro events that require a longer holding time than one day or a few hours. I've tried to live like that. I am not capable of living like that. And I honestly don't think anybody is. I don't know who the best day trader in the world is. I don't know anybody who's smart enough to get it every single time, and that's what they do. Okay, I don't even know any major hedge funds that primarily do this kind of stuff. So I think we have to look broader at markets, broader at valuations, broader at quantitative tightening, broader at interest rates. This is your first video. We have discussed this in many previous videos. If you've been watching other videos, I'm sure you know how we stand. So we're going to continue with addressing the ideas that are present in this blizzard of headlines from the Israeli tensions. The next major thing to consider is oil. And oil is an area that we have been bullish for a very long time, since about October or November of 2020. And we've continued to be this way. And we've continued to be this way not because of tensions in the Middle East, not because the United States is going to bomb Iranian oil fields. None of these things. We've been bullish oil because we expect oil consumption to, after COVID, rebound and the economy to return to normal and to continue to grow. But U.S. oil production fell. The rest of the world isn't, picking up production in a meaningful way. ESG has made a longer-term oil problem where oil companies don't feel secure in their future. The idea that you can just drill a new well and maintain it and do all these kinds of things and expect to grow your company that way is seemingly dead. And I say this because, pause for a second, yes, there is a potential that, we'll add additional oil sanctions on Iran on top of what we already have. But we've seen the effects of the Russian oil price cap. We've seen the effects of Russian oil sanctions. They're zero, okay? Iran sells most of its oil to China already. It's not selling it to Europe. It's not selling it to the United States. It's selling it to China. It's selling it to India. These kinds of areas. Southeast Asia. And those areas are not going to comply with U.S. sanctions. India's been openly buying Russian oil. Openly. They talk about it like, of course we're going to buy, $80 a barrel oil when it's at 95 or whatever. So that's what they're doing. And I expect that to be the case regardless of what happens to Iran. So excluding some supply side attack on Iranian oil assets, thus far I see no impact to the price of oil. However, that does not mean I'm saying today's move is unjustified. Okay? I thought the last couple days, very aggressive move in oil was extremely unjustified. We have a supply and demand deficit. We have oil consumption continuing to hit records, continuing to grow, despite severe economic situations in China, a recession in Europe, these kinds of things. And finally, for the long-term picture of the oil space, I think the Exxon Pioneer deal made it very clear that the future is not drill, baby, drill, as was the past. The future of growth in the United States oil patch is consolidation, is acquisition, is buying players. Exxon saying, okay, we will give you guys a premium because we believe in the long-term story, so we're going to front up the cash, get the cash flows, and simply grow our cash flows, and in 10 or so, 15 years, we will have those things paid off. Now, I'm not so happy about this because my largest U.S. oil position is now Devon Energy, and they are trading too cheap. And I just know some player is going to take advantage of this situation. So I hope the company decides not to do a deal, allows us to do what those companies want to take advantage of us for, and I would rather have the cash flows in that company. That's just me. I'm one shareholder, small shareholder compared to everybody else. But that is my take on the situation. I am very optimistic of the space. I like owning companies that are very cheap, that produce a lot of cash. That's the name of the game, and that's what we do here. So, I like those stocks. Regardless of immediate trading headlines, we remain bearish on markets and bullish on oil, pending a massive flood of Venezuelan oil. Now, this has been something that the White House has talked about for a while. But Janet Yellen said something about $60 oil today, this morning. I'm not saying that they're going to do that. I'm saying I'm watching the situation. I'm aware of it. pending that situation, because that would obviously be a relatively bearish situation, Venezuela producing a bunch of oil, not us, not any of our companies, none of this. Yeah, it's not ideal. So I'm not saying it's happening. I don't think it's going to happen in a meaningful way. I think they can pick up production a little bit. They already produce some. I believe they also sell it to China. But I don't think they can produce 3 million barrels a day of extra capacity in any meaningful time frame. I think the Saudis have the most leverage they've ever had in terms of oil supply, and I think that they're going to keep it that way for now. So that's today's video. That's looking at all the Israeli headlines. Essentially, it's a bunch of headlines, it's a bunch of trading dynamics, it's a bunch of fear, but thus far, nothing that should be impacting broader economics in the machine. So, that's today's video, and until next time, peace out.